What we have on the screen is one of the most magnificent charts we can appreciate in the recent times. This is a clear reflection of the efforts made to sustain and reverse the damage left by the pandemic. Reserves, central banks and governments are taking measures that are being criticized from the comfort of not having responsibility at all. But the reality and the markets reflect that the actions have been correct. Last week, we shared the positions of the central banks and the reasons for the recent rise in gold prices. Let's remember that the markets closed part of Friday and Sunday and the whole Saturday, so retails, we don't trade. Remember, we don't provide analysis, we provide trading zones and premium levels. First of all, let me show you what we have the next week. As a trader, always check first the fundamentals every Sunday at least. Check for the whole week. I use Forex Factory. I feel like this is a solid one, but always try to use at least two different ones, like my FX book, to complement the news, because sometimes they actually fail to show the important news some days. The thing you have to do is to go here, check basically the time period you want to have the news. So after that, I go here, I check only USD, because I only trade Xauusd. I don't care about anything else. And I check orange and red. I only need to check actually the red ones, but well, I want to show you the whole panorama. Red will be volatile for the whole week. We have CPI, we have PPI, we have projections, especially this day. This whole day, don't trade. Some pips to be dropped, don't trade that day. And after that, after this pressure, if the rates are the same, or I don't think so, but if they go lower, price is going to go down. We can see that we have a very violent push to the upside when market opened at Sunday. This was no joke. Actually, as you can see, we have the market open here. Very big push. I'm actually at 4-hour time frame. Let's check it hour by hour. So we have this push at the market close. I think that this was only a matter of 2 candles. The one that gave us the major push to break this zone. This was actually the all-time high, the previous all-time high zone that price wasn't able to break on Friday. So this day you can see this is way too much of the volume that you want to see when you need to break a major zone. So we had a $40 candle. This is huge. Like, you don't expect this type of candles and you don't expect them at the market open. So we can see that we have a new printed all-time high at 3146, and after that price just went south, and it was in the same session actually. As we can see, the 4-hour time frame, very clean structure where we push slowly to the upside until this rapid liquidity. Like we can see, this was not clean, it wasn't natural. The market rejected so fast this zone. We don't care. Actually traded, we sold to 2143, our new all-time high, based on the trading zones, levels, cycles and price that. So we can see that we left this FIBO from the last week analysis. We pretty much didn't touch this chart, so everything is the same. After the price spiked to the upside and created a new all-time high, we had a very clean $150 in almost 1 week. And the major move was $125. Almost the major move was kind of in the same day. So FIBO that we raised to the upside, it's still being respected to the downside. And we have our NRP, it's here at 1971, even though we closed our trading cycle at 2070. This is our major order block area, but we closed around here. We consider this a major area where price needs to retest this zone at one point. So consider for long term, we have 2 areas only. For bulls, we need to recover this area, and for bears to completely break structure, we need to break 1971. But as we can see, we're breaking again the zone of gold, that is 2000. But expect this is the range. We have a 34 or 36 range for scalpers. This will be your only. We keep rejecting this area 2000 and 2036, and this news, the news that we have with Powell, we keep the rates the same. I risk scalp them, or maybe a position looking for the whole move on the range, but it's risk. If you want to go safer, wait for 2024, because I don't think any of these levels will be touched this year unless we have big news this week. If not, just keep your levels marked. I'm gonna delete the FIBO. I'm gonna keep 1971 as my structure level, but we can say that we're bearish. Keep that in mind, but keep this zone, especially this zone is the one that you need to keep a very good track, and the possible break here. Even though 2000 gets rejected, it doesn't matter. You need to wait for 1971.